Welcome back to the channel. I am James and today we are looking at Amazon.com Inc. ticker symbol AMZN. They have just released their earnings for the first quarter of 2022 and the market isn't reacting too favorably towards it. It was originally $2,891 a share, up almost 5% on the day, and it is now down $346 a share, 12% on the day, to $2,554. So what we're going to be doing today is just touching on the headlines, going through these numbers, looking at why the shares have took a dive, then putting these updated numbers into, we're not going to put them into there, we're going to put them into there, my discounted free cash flow models and the Buffett-Graham intrinsic value model to see if the stock is a buy in 2022. So should you be selling like the market? But before we get in, let's just quickly compare Amazon to the market, as I do like to do this. What's it been doing over the last year? We have Amazon in the blue and the market, the S&P 500 that is, in the yellow. If we compare year to the day, pretty, well, actually, no, not very similar at all. Amazon down 15%, the market is down 10% year to date. If we go over the last year, you can see Amazon is also being beat by the market once again, down 16%. This is crazy for these FANG stocks. Market is up a little bit, pretty flat for the year. And if we go to 5 years, this is when you can see more of the bigger story here. Market up 78%, whereas Amazon is up 209%. So Amazon has been crushing the market pretty consistently up until this last year, where it's had a massive, massive decrease. So let's get into the headlines. Before, can you please subscribe if you're not already? I'm bringing out many videos on earnings, and I know you guys are liking them. There's been a lot of buzz on the channel, and I'm really, really appreciative. So thank you very much, and give a like because it always helps me out. So on the headlines, Amazon shares fall on bleak forecast and slow earnings growth since .com bust. Amazon on Thursday gave revenue forecast that trail analyst estimates. Their growth rates are the slowest they've been since the .com bust in 2001, and the company recorded a $7.6 billion loss on its investment in electric vehicle maker Rivian. So very interesting straight away. So let's get into these earnings. We're actually just going to quickly look at this because this gives some pretty telling signs. Operating free cash flow down 41%. Free cash flow has decreased to 16.8 billion compared with an inflow of 26 billion. Once again, free cash flow payments less repayments of finance leases and finance obligations decreased. Basically, everything is down. Net sales is up though. Operating income decreased and net loss, well, we'll talk about the net loss right now. Let's go into it. So very, very interesting. Haven't read a Amazon earnings report like this in a while. So let's get into it. So if we look here, sorry, not there. We'll just scroll up a little bit more. Let's have a look at well, this is the consolidated operations. We have the 3 months ended on the left of 2021. Then we have 2022 on the right. So how does Amazon make its money? Well, it's split into the product sales and the service sales. Product obviously being what we all know as Amazon. The service, well, I think everyone knows AWS. And you can see here, 57 billion in 2021 for this quarter, and that is down to 56.4. Services is up 51 to 59.9. So overall net sales are up 108 billion to 116. So what does that mean for the year? Well, let's just go here. This is the trailing 12 months. This hasn't been updated yet because that's why I'm bringing it to you. 280 billion, 368, 469, and it is now up to 477. So still up on the net revenue. So Amazon is increasing, but that has slowed quite dramatically. Next, we're looking at the net income. Now, why is this interesting? Well, if it's in brackets, it's a loss. 8.1 billion in 2021 for the quarter, 3.8 billion in the negative. This is the reason why Amazon has taken such a big hit. They are in the negative for the quarter. So how are they in the negative? Well, it is obviously net sales, which is revenue, minus operating expenses plus other interest and expenses. But let's have a look where the money has gone. Cost of sales up slightly, fulfillment up, technology and content up, sales up, everything is up 99 billion to 112. And you can see other net income expense, 8.5 billion in the red, which is what we just talked about at the start of the video. They are down. So overall, the net income is 3.8 billion in the red. So if we look and compare to previous years, 10 billion, 11 billion, 21 billion, 33 billion, it puts the current year on still the trailing 12 months at profitable. It's 16.3, but that is the lowest it's been since, well, 2018, sorry, 2019, so gone down quite a bit. Next, what we want to be doing is looking at the shares outstanding, what are Amazon doing with their shares, and they are actually issuing more shares, which is well, why do we not like issuing more shares? Because you're diluting shareholders. But if the shares are overpriced, then they can use this capital to invest wisely and increase the share price another way. So previously, not really been a problem because Amazon share price has been increasing. But now with the dip, maybe they want to be buying back some shares. I mean, currently the share price is, let me just get rid of S&P 500. And we'll go 5 years. I mean, it's not down massively from an all-time high, still 21%. That's a massive decrease for Amazon. So maybe this is the time to start buying back those shares. Amazon, you're issuing them at over 3,000. Now that it's gone to almost sub 2,500, maybe this is the time you want to start buying back those shares because it is cheaper. Right, finally, we want to look at free cash flow. So let's just scroll down a bit here and we need to go to the cash flow statement, which is a little bit lower. Sorry, 1 second. Cash from operating activities, and we don't want this one, we want that one. Yep, there we go. So what's happened from the, plants, and where's it gone? Oh, I've lost this again. That's a damn shame. Let me just while I'm searching for this, guys, please consider subscribing if you're not already. I'm normally a lot more professional than this. I found the page, but I seem to have lost it right now, which is a little bit on the embarrassing side, but I'm sure we'll find it in the end. It's not that many documents there. It's just that this Amazon one is slightly different. Where the heck is it gone? I'm probably going to have to cut this out, but I'm sure you guys won't mind if I quickly find it very, very quickly. There we go. They put their cash flow statements on the first page, which is a bit different. So apologies for that, guys, but hopefully you use that time to like the video rather than leaving the video. But, you guys do what you want. I'm very happy for the support I've been getting. So what are we looking at here? We're using net cash. Provided by operating activities. Once again, you can see the negatives here. This is the 12 months ended. We're not going to be looking at that right now. We're going to be looking at the 3 months ended. 4.2 billion to 2.7 in the negative. So net cash from operating activities is in the negative. Purchase of property and equipment, which is capex, is up 12 billion to 14 billion. So that gives obviously a negative free cash flow of the quarter of around about 8.9 billion. And if we look overall here, once again, Amazon is in the red on the free cash flow. 39 billion, take away 63 is around about 24 billion in negative. So if we compare it to previous years, let me just go back to Yahoo Finance and look at the cash flow statement once again. Yep, 17 billion, 21 billion, 25 billion, 14 billion in negative, and now minus 24 billion. So that is not going to be looking good for our discounted free cash flow models, which we're going to be looking at right now. So we've calculated the future free cash flows, and you can see right now, basically I am taking averages. So this is estimating Amazon's free cash flow being 7 billion, 9 billion, 17. So this is going to be giving a very bad review. Yes, $458 a share. I don't think that's where it's going. I don't think Amazon are going to be, taking averages like this. So if we I don't think they're going to be in the negative. This is going to be a free cash flow driven company once again. So let's go back to their sort of previous numbers, which were probably around about, well, let's go on the low side. Let's go, their free cash flow ratio is about 121%. That would give us still overvalued based on discounted free cash flow model. So even if Amazon were getting to 30 billion free cash flow and increasing in the next few years, according to discounted free cash flow models, this stock would not be a buy. But if we go to the Buffett-Graham intrinsic value, which is earnings per share expected growth rate, that actually has the stock very fairly valued at the minute, undervalued, $5,340 a share, which is at about 100% discount from where the stock is right now. So pretty all over the place in terms of the models. I would say that a price is somewhere in the middle, because I do like both of them, but they need to be generating free cash flow again. So this, if you loved Amazon at a previous price, I mean, $2,570 could be a steal. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already, and I'll catch you guys next time. Thanks for watching.